One of the top performing ETF in the Johannesburg stock market saw over 68% growth in 2020 alone. The second one saw 56% in growth, and this is during a global pandemic. Why are people investing in ETFs, and what exactly are ETFs, and how can you as an average South African invest into them, buy into them, and understand how they work? Today, I'm answering those questions as we ensure that we simplify investing for the average South African. So hit that like button, hit that subscribe button, and ensure that we grow this community of financially savvy individuals. So let's get into this video. Hello future millionaires and billionaires, and welcome to my YouTube channel. On this channel, we're dedicated on simplifying investment, budgeting, saving for the average South African. So if you're one of those who are interested in growing your wealth, understanding saving, understanding investing, do ensure that you stay tuned. But as always, do remember that my video do not constitute as financial advice, are only just for educational purposes, nothing beyond that. But let's get into this video. And in today's video, we're talking about ETF, exchange traded funds. What exactly are ETF, and why are they so important for people who are investing? And why, in my previous video, I said if you're a beginner, it's very wisely to invest and start with ETF and in opposed to starting with individual stock. Why did I say that? And what exactly are ETFs? So to simplify it without trying to complicate it, is that ETFs basically is a basket. It is a basket. It's a basket that has so many shares under it that when you buy a share of that basket, you're buying shares of many companies. Simplest way possible. If you want to understand ETF, exchange traded funds, understand them as a basket that has shares in them, and when you buy a share of the basket, you're buying all the shares that are inside it. Let me make an example again. In the Johannesburg, we have what we call the top 40 companies. So for example, we have an ETF which I'll put here that trades the top 40 companies. Also, it's not a recommendation, it's just me putting it there so you can understand. When you buy this ETF that trade in the Johannesburg stock market, trading following the index of the top 40 companies, you are just buying one share of this ETF. You are basically buying all the 40 companies which are in the Johannesburg stock market. You don't need to sit down and go buy every single one of the top 40 companies. By just buying this ETF that has all these 40 companies, you already have the 40 companies, the performance of all those 40 companies. The same way when you buy an ETF that follows the index of the SP 500, which is the Standard & Poor's 500 companies in the US, the top performing 500 companies in the US. When you buy an ETF, I will put it right here too. When you buy that ETF, you're just buying that one share or 10 shares, whatever shares you want to buy of that ETF. By just doing that, you yourself have already acquired all the 500 companies. Not directly, but you've acquired an index of all the 500 companies which are trading in the New York stock market. And you are buying this ETF in the Johannesburg stock market. The same way you can find an ETF, a basket of shares that follows companies in for example in Japan, or follows the market of Japan, or follow the markets of China, or follow the markets of other African countries. The same way you can do that when you buy an ETF. An ETF allows you the opportunity to do such a thing. But also remember, for me, I love to simplify myself, to make things simple for myself. There are two types of ETF basically. But many people will tell you there are 5 and all of that and all of that. But for me, so I can understand myself, there are 2. They're what I call an index ETF and a sector ETF. When I talk about an index ETF, as I mentioned before, I'm talking about an ETF that follows an index. When we talk about an index, we're talking about a source of measurement. For example, in America, we have a source of measurement called the SP 500, the Nasdaq 100. The SP 500 is just the top 500 companies in the United States. So you have that index, that SP 500 that follows those 500 companies, and you'll see in the news sometimes will say the SP 500 is up by how many points, the SP 500 is down by how many points. When they talk about that, they're talking about the 500 biggest companies in America. And for me, as the average Ivan, I cannot have money to buy all 500 companies in the United States. So what I will do is, Ivan, I will buy an ETF that follows that index, that follows the SP 500 index, or follows the NASDAQ 100 index. So basically, that ETF that follows that index is an index ETF. You can find them. I'll put one right here as an example for you guys to understand what I mean when I say an index ETF. Remember, the ETF I'm mentioning here, guys, not recommendation. I don't do stock recommendation. I don't do all of that. Just me showing guys just what it look like an index ETF. And also at the same time, an index ETF can also follow a market. When I talk about market, I'm talking about an index for an ETF that follows the Japanese market, how the Japanese markets are performing in general, or how the African markets are performing in general, or the Nigerian market, or the Singaporean market, or the Brazilian market. All those countries can have an index ETF that tracks the performance of those countries or the indexes in those countries. That's an index ETF in my understanding, how I simplify ETFs for myself. And secondly, we have what we call a sector ETF. When we talk about a sector ETF, basically we are talking about an ETF that follows a particular sector. And when we talk about particular sector, for example, we can talk about property. When I have an ETF, for example, I'll put one here that I hope you can see that it popped up. I hope it popped up. An ETF that follows property, nothing else, property. That's a sector ETF. You can have another ETF that follows technology, that follows commercial real estate, that follows the same thing as property. But anyway, you get the point. That follows a lot of sectors, and also sometimes it follows currency. Sometimes it follows sometimes it follows commodities. You can have an ETF that specializes only in gold, an ETF that specializes only in oil, an ETF that specializes only in platinum. I will put some of them right here so you can see, just for example, what type of ETF I'm talking about. And that's, for me, in my understanding, is a sector ETF. It's not an index ETF. And you can have an ETF that follows the Johannesburg top 40 companies. I own one. I'm proud of it, and I'm real sure I top it up every single month. And that for me is an ETF that follows the top 40 companies. Unlike me having to go buy all the single top 40 companies by single, one by one, incurring all those fees by buying one by one. I just buy an ETF that has all those 40 companies. But guys, be careful that some ETF do the same thing but are just owned by different companies. You can have an ETF, for example, like this, I'll put right here, that can be the top 40 companies but it's owned by a different company. And this one here, also the top 40 in the Johannesburg stock market, but another company. See, they do the same thing. Both of them have the top 40 companies in the Johannesburg stock market, but they are owned by different companies. And nice thing also about an ETF in comparison to a unit trust, because remember, a unit trust itself also is like a basket that has so many shares or so many underlying assets in it. An ETF, the nice thing about it is that it's not actively managed, it's passively managed, meaning you will incur lower fees when you invest into it. Brilliant, brilliant, brilliant. The fees for an ETF are so low in comparison. For example, if you want the top 40 companies, instead of buying all the top 40 and carrying all those fees, buy an ETF, cheap. Comparison to a unit trust that has an active fund manager that deals with it every single day, and you must pay him. Sometimes you pay him 2% of whatever money you invest. Sometimes you pay him 1% or 5%. I don't know what the fees of unit trust nowadays. I don't do those things. Whatever the fees they are, instead of paying a fund manager to do that, you just pick an ETF that you like and you just follow it and just invest into it. That's the beauty of it for me. And the other thing also that I like about ETF is the fact that they're easily accessible. Like you can, if you have easy equity, you have them. You just go to easy equity, you see that the equities, says ETF, says basket, it says cryptocurrencies, or it says currencies or crypto, 69. You can just pick them. Just pick them and just get your ETF. For those who want to go direct to this ETF company that offers them like one invest and all of them and all of them and all of them, you just go directly to the company that offers those ETF. I will link some of them in the description below. Boom, and you buy them. Literally like that. You go to your broker if you have a private broker and you're privileged that way. Go to your broker can give you access to them. That's the beauty of ETF. Easily available. No minimum fee needed. Nowadays with easy equity of 5 rand, you can get an ETF. an ETF, you can have it. And that's the beauty that I love about it. That's what I love about it. So that's the beauty of ETF, and the benefits of it. Number one, it's similar to shares. There's no different about it. So the benefit that in terms of capital gain, you see capital gain. If you, for example, you bought it at R1 and now it's selling at R2, you have made yourself R1 profits as a capital gain of it. Secondly, ETF, they paid out dividends. So when a particular ETF paid dividends, some of them pay quarterly, some of them pay twice a year, some of them pay once a year. It's up to you to go find out in ETF Central. I will link them in the description. Go there, get the fact sheet of that ETF, find out when does it pay the dividends, how much percentage the dividends. Some of them, they pay 2% of the amount of shares that pay share. Some of them pay higher than that, some pay lower than that. It's different. So to go to ETF Central, I'm not promoting them as like it's a paid promo. No. So just go to them, click there, whatever ETF you're looking for, get the fact sheet of that ETF, understand what is inside it. Because sometimes people find someone who buy an ETF that is 30% Facebook, and you already have invested in an individual stock of Facebook, or you find an ETF that is, I'll make an example, is 50% Capitec, and the rest just other companies, and you already own Capitec shares. Why are you buying that ETF? Doesn't make sense, you understand? So it really is important that when you buy an ETF, you also understand what percentage is made out of. Sometimes when one ETF is hugely Tesla, or one ETF is hugely Microsoft, or one ETF in South Africa is hugely Capitec, or hugely Standard Bank, whatever the case may be. So it's also important to do that. And at the same time, as I mentioned before when I started this video, don't buy the same ETF. I made that mistake when I started investing. I bought the Nasdaq 100 from one company and the Nasdaq 100 from another company. I was like, why? So that also is important to take into account. And also, guys, also really is important that when you buy ETF, sometimes remember, ETF also gives you the privilege to invest into them using a tax-free savings account, so you don't pay tax. And Easy Equity, for those who are Easy Equity user, I'm not promoting Easy Equity. They don't pay me. But those who use Easy Equity, you can even do that through Easy Equity or through whatever trading investment platform, investment platform that you're using. You can also do that. Use ETF with your tax-free savings account. So you use them and you invest into them, and you don't pay tax in terms of your capital gain tax or dividend tax, whatever tax may be. You don't pay because it's in your tax-free savings account. But remember, as per my video about tax-free savings account, which I'll put here, remember, a tax-free savings account has a yearly limit and a lifetime limit. So don't surpass that, because you'll be charged 40% whatever money you put on top. As always, guys, I'm Ivan Samba. Forgive me for wearing my cap today. I look horrible. I had a pimple breakout. That's why my skin is like this. So, and also my hair didn't cut it. I'm back home, guys. My grandmother is spoiling me so much. So that's why I even say a little gain of weight. But thank you so much for watching, guys. I'm Ivan Samba, your student investor, and I'm appreciating your support. Thank you so much, guys. Cheers.